What's up, everybody? Welcome to the 36th episode of the Investing Penguin. Covered calls and cash secured puts. I've got some quick tips for watching my videos on YouTube. If you look on the summary page in the details section of this video, you'll see the timestamps right here. So after you watch my videos, you can hit those timestamps and jump around to the different sections if you want to review the details again. Also, if you look under the settings section right here, you can watch this video at a faster speed and turn on the subtitles for your language. Si hablas solo español, entonces tú puedes ver y leer mis videos usando los subtítulos. If you are new to my channel, stick around as I reveal the numbers for the month of March, and stick around till the end as I share some interesting facts about the Ides of March and country singer Loretta Lynn. And please hit all those buttons, subscribe, like, and share. It's supposed to help all my YouTube algorithms and make me filthy rich. Nah, but seriously, if you appreciate these videos, then please subscribe. Let's begin. Empecemos. Vámonos. For those of you who don't know me, I am the Penguin, and in this video I reveal the profits using covered calls and cash secured puts for the month of March. So the month of March sucked. It was terrible. The worst quarter for the markets since Q1 of 2020, which is basically when the markets tanked due to COVID. Putin's war against Ukraine continues to hamper the markets. Biden is falsely blaming Putin for our high gas prices, which I reviewed in the previous video. Oil and gas prices have been climbing the day after Biden was elected president. The markets are telling us that Biden's energy policy is no good. But now that Biden is releasing additional oil from our SPR, Strategic Petroleum Reserves, well, maybe that will help. Lastly, lots of chatter about an upcoming recession from all the stock gurus and CNBC experts. Let's hope in the month of April that we can avoid a recession, get this inflation under control, and end the war in Ukraine. Let's take a look at the graphs for March. The markets got hit hard due to Putin's war against Ukraine, but recovered off the lows. The last day of the month, the markets were getting hammered, but I'm hoping Kramer is correct and a market rally is coming. What do you think? Rally or recession? Throw it in the comments section below. Same chart pattern for the Nasdaq Composite. Some stock gurus are bullish and cautiously optimistic. Same chart pattern for the S&P 500. Some stock gurus are expecting lackluster markets. It's pretty confusing right now for retail investors as there are lots of different opinions on the markets right now. So here's a chart of AT&T, and AT&T finally announced the details of the Warner Media spinoff and the next upcoming dividend payment. The stock got a little bit of a pop in price, which I used to roll up to the $25 strike price and roll out to the May 6 expiration date. For me, I am still selling covered calls on AT&T below my purchase price, and if my shares get assigned, I am ready to take the loss. In this video, we're not going to review the details on the AT&T spinoff deal, but I highly recommend the YouTube channel Investing with Jimmy. He just made a video outlining the details on the AT&T spinoff, so watch his video if you own AT&T stock. So here are my stocks that are on for the month of March. If you have rolled the dice in the craps game, then you understand the on button. Utility Spider ETF. This cash secured put expired worthless, goes in the books as a win. Pfizer. In process, sold covered calls and cash secured puts. I'm using the cash secured puts for two reasons. One, if assigned, I buy the stock at a lower price and lower my average cost per share. Two, if not assigned, then I keep collecting premium. Citigroup. In process, sold covered calls. Really hoping for a pop in the price, otherwise I have to think about selling covered calls below my purchase price. Altria Group. This cash secured put expired worthless, so goes in the books as a win. Financial Spider ETF. This cash secured put also expired worthless, so goes in the books as a win. Walgreens. In process, sold covered calls and cash secured puts. Kimberly Clark. In process, sold covered calls. Facebook Meta. This is my fourth cash secured put trade with Facebook. And man, Facebook is paying off with these cash secured put trades. Rinse and repeat. This is a highlight for me in the month of March. Verizon. In process, sold covered calls and cash secured puts. AT&T. In process, sold covered calls. Like I said earlier, my current strike price is $25 a share and my purchase price is around $31 a share. My break even as of this moment is around $29.60. I'm still selling covered calls below my purchase price, and if my shares get assigned, I'm ready to take the loss. Fifth Third Bancorp. In process, sold covered calls and cash secured puts. Intel. Off the bench, and I sold covered calls on a pop in the price. So here are my stocks sitting on the sideline and not collecting any premium because the trading price is too far below my purchase price. This is what kills my returns. My goal is to make 24 to 36% returns, but with my stocks sitting on the bench, I'm only collecting the dividend payments, which is like 2 to 4%. Let's see if Cramer's correct about that upcoming rally. Then hopefully I can get JP Morgan and 3M back in action. So before we get into the monthly numbers, we are going to review a number of trades completed in the month of March. If you want to dive into the monthly numbers, you are more than welcome to fast forward to those sections. So let's review my Walgreens covered call trades. I'm on covered call trade number 3, and Walgreens was going great until it just got hammered after earnings. The earnings report was positive, but that's in the past, and the markets are always looking ahead to the future. Walgreens has some headwinds with COVID coming to an end and the cost of their healthcare division. It closed at $43.86 last Friday, which seems like a complete overreaction. So here's covered call trade number 1. On February 14th, I bought 500 shares of Walgreens for $47.09, and I sold 5 covered call contracts for 69 cents for the February 25th expiration and the $47.50 strike price. I decided to keep the strike price just slightly out of the money considering how the markets are going. I collected a premium of $342.19. On Friday, February 25th, Walgreens closed below $47.50, so I kept my 500 shares of Walgreens and started preparing for covered call trade number 2. So here's covered call trade number 2. I sold 5 covered call contracts for 90 cents for the March 18th expiration and the $47.50 strike price. Once again, I decided to keep the strike price just slightly above my purchase price. I collected a premium of $447.19, which is a pretty good premium. Well, on Friday, March 18th, Walgreens was trading around $46 a share. Then that afternoon, there was a rally close to $47 a share. So I decided to buy back my shares for 3 cents and immediately sold covered call trade number 3. So here's covered call trade number 3. I sold 5 covered call contracts for $1.30 for the April 8th expiration and the $48 strike price. This time I chose the $48 strike price since Walgreens was trending upwards that Friday the 18th. I collected a premium of $647.19, which was a really good premium. You'll also notice by collecting that good premium, my break-even price is now sitting at $44.23 a share. And guess what? After earnings, Walgreens is now trading at around $44 a share. So it's really important to track your break-even price because it will help you in deciding on how to structure and manage your next trade. I think Walgreens will pop back up closer to my April 8th expiration date. If not, then I will sell covered call trade number 4. So when Walgreens got hammered after earnings, I decided to sell a cash secured put. If I get assigned the shares, then I can lower my cost basis per share. If I don't get assigned the shares, well then I keep collecting premium. On April 1st, Walgreens was trading at $43.54 a share. I sold 2 cash secured put contracts for 58 cents for the April 14th expiration and the 42.50 strike price. This was a deep out of the money strike price, so I was taking smaller premium but getting big downside protection. I collected a premium of $114.88. If Walgreens closes below 42.50 a share on April 14th, then I'm buying those shares at a great discount, which is fine since I already own 500 shares of Walgreens. And if Walgreens closes above 42.50 a share, the option will expire worthless, and I will still make a profit of $114.88 for 13 days, which is a 37.9% annualized return. So let's review my Kimberly Clark covered call trades in greater detail since I have sold those covered calls below my purchase price. This could be risky if Kimberly Clark has a sudden rally and my shares get assigned at a loss. I would take a loss and also miss out on any upside potential. So here's covered call trade number 1. On February 28th, I bought 200 shares of Kimberly Clark for $129.50 and I sold 2 covered call contracts for $1.60 for the March 18th expiration and the 131 strike price. I decided to keep the strike price just slightly out of the money considering I bought Kimberly Clark during Putin's invasion of Ukraine. I collected a premium of $318.88. On Friday, March 18th, Kimberly Clark closed well below 131, so I kept my 200 shares of Kimberly Clark and started preparing for covered call trade number 2. So here's covered call trade number 2. Like I said, my strike price is below my purchase price, but guess what? It's still above my break-even price. I sold 2 covered call contracts for 90 cents for the April 22nd expiration and the 128 strike price. To get a higher premium, I had to go 30 days out to the April 22nd expiration date. That allowed for me to take the 128 strike price and stay above my break-even price of 127. Here are the 2 scenarios. If on Friday, April 22nd, Kimberly Clark closes above 128 a share, then my shares will be assigned, but I'm still going to squeeze out a very small profit of $197.26. If on Friday, April 22nd, Kimberly Clark closes below 128 a share, I will keep my shares and start preparing for covered call trade number 3. So Facebook still has not recovered from their fallout of their earnings report back in February. In my previous video, we discussed all 3 of my Facebook cash secured put trades. In this video, we'll review cash secured put trade number 4. Facebook has been a nice highlight in the month of March for me. I had the potential to buy 100 shares of Facebook at $185 a share. On March 21st, Facebook was trading at $208.42 a share. I sold 1 cash secured put contract for $1.31 for the April 8th expiration and the 185 strike price. This was a pretty deep out of the money strike price since the markets are crazy right now. I collected a premium of $130.44, which equates to a 14.3% annualized return. If Facebook closes below 185 a share on April 8th, I'm buying those shares at a great discount. And if Facebook closes above 185 a share, the option will expire worthless, and I will still make a profit of $130.44 for 18 days, which is a 14.3% annualized return. And then I will start looking at cash secured put trade number 5. So this next trade with Third Bancorp is a copycat trade from the Covered Calls Advisor. If you don't already follow his blog, just Google Covered Calls Advisor and check out his trades. Many of his covered call trades are in the money, so his strategy is conservative. On March 28th, I bought 300 shares of Third Bancorp at $45.24 a share. I sold 3 covered call contracts for 80 cents for the April 14th expiration and the $46 strike price. I decided to keep the strike price just slightly out of the money considering how the markets are going. This is slightly different than the Covered Calls Advisor as his strike price is 44, which is in the money. I collected a premium of $238.31. If on Friday, April 14th, Third Bancorp closes above $46 a share, then on the following Monday, my 300 shares of Third Bancorp will sell at $46 a share. I'm expecting to make a profit of $465.81 for 20 days, which will be a 32.04% annualized return. Plus, I will be capturing the dividend payment of $90. If Fifth Third Bancorp trades sideways or never breaks above my strike price, well, then I keep the shares, I rinse and repeat, and I write the same covered call again and keep collecting premium. So 3 days after I sold covered calls on Fifth Third Bancorp, the price dipped down just below $44 a share. And this seemed like an opportunity to capture more premium or capture more shares at a lower price. I had the potential to buy 300 shares more of Fifth Third Bancorp at $42 a share. I sold 3 cash secured put contracts for 50 cents for the April 14th expiration and the $42 strike price. I collected a premium of $148.31, which equates to a 30.7% annualized return. If Third Bancorp closes below $42 a share on April 14th, I'm buying those shares at a good discount and also keeping the shares for my covered call. And if Fifth Third Bancorp closes above $42 a share, the option will expire worthless, and I will still make a profit of $148.31 for 14 days, which is a 30.7% annualized return. Well, we discussed a number of trades, so let's review the numbers for March, which has been frustrating. Only $4,900 in profits for the month of March. So the green is covered calls, the blue is cash secured puts, the orange is dividends. So in the month of March, I sold 9 covered calls and I bought back 2 covered calls, generating over $2,400 in premium, aka cash flow. You'll notice that I bought back my Walgreens trade and my AT&T trade. So we reviewed that Walgreens trade earlier in this video. On March 18th, Walgreens was trading around $46 a share. Then that afternoon there was a rally close to $47 a share, so I decided to buy back my shares for 3 cents. And immediately sold covered call trade number 3 to take advantage of that late afternoon rally in the Walgreens stock price. We did discuss AT&T earlier in this video, so AT&T finally announced the details of the Warner Media spinoff and the next upcoming dividend payment. The stock got a little bit of a pop in price, so I decided to buy back my shares and then resell my covered calls. This allowed me to roll up to the $25 strike price and roll out to the May 6 expiration date. The buyback cost me $605.28, which is a wash because I collected $330.69 in premium on my original covered call trade, and I collected $304.69 in premium on the roll up and roll out trade. So in the month of March, I sold 9 cash secured puts and I bought back 5 cash secured puts, generating over $12.50 in premium, aka cash flow. So the reason why I bought back so many trades in March was due to Putin's invasion of Ukraine. Even though the trades were going to expire worthless Friday afternoon, I wasn't taking any chances that during after hours trading or the weekend. For $8 in buyback costs, that's my insurance policy for a peaceful, uneventful weekend. In the month of March, I captured 4 dividend payments generating $12.50 in profits. Intel, Pfizer, Walgreens, and 3M. It sucks when your stocks are on the sideline, but the dividends do help. And in the month of March, no stock gains. I call this the good, the bad, and the ugly. So not every trade is a winner. You have to take the good with the bad, and the losses are just downright ugly. The good, the bad, and the ugly is a great Clint Eastwood spaghetti western. So ending the month of March, I've got just under $45,000 in unrealized losses. The Ides of March have been brutal on my stocks. Citigroup, Intel, JP Morgan, 3M, and AT&T are really dragging me down. In the past, these unrealized losses didn't really bother me since these stocks all pay dividends. But if things don't get much better, well then I'm going to be bothered. So what went wrong in March? Well, JP Morgan and 3M are on the bench. Most of my stocks are trading below their purchase price. My year-over-year profits have decreased. My unrealized losses have increased. And Biden. I've listened to Biden address the nation on these high gas prices, and he is just flat out lying to the American people. Biden and his speechwriters are spinning the truth on what is really going on. He's blaming the oil companies for not drilling for enough oil. He's blaming Putin for high gas prices. Biden just needs to look in the mirror for his energy problems. Biden has an opportunity to be a world hero by working with our oil companies versus blaming them. So just imagine if Biden could send tankers filled with American oil to Europe, escorted by our Navy. But as CNBC reported last week, there are still 17 tankers with Russian oil heading to U.S. ports before the sanctions deadline. This is bad leadership by our president. I'm sorry to get political, but I just can't stand how this administration spins the truth. So what went right in March? Well, not a whole lot. My Facebook cash secured put trades are a highlight. I captured dividends with Intel, Pfizer, Walgreens, 3M, and Intel is off the bench and back in action. Well, that's it. Is it me, or did the month of March suck? Let's hope April is a better month. More videos are coming, and stick around for 10 seconds more as I share some interesting facts about the Ides of March and country singer Loretta Lynn. So have you heard people say, beware the Ides of March? Julius Caesar, dictator of Rome, was stabbed to death on March 15, 44 BC in the Roman Senate House by 60 conspirators led by Marcus Junius Brutus and Gaius Cassius Longus. He was betrayed by his friend Brutus, hence the famous phrase, "Et tu, Brute?" That day, March 15th, later became infamous as the Ides of March. Before his murder, Caesar was appointed Rome's dictator for life. As the sole Roman ruler, Caesar launched ambitious programs of reform within the Roman Empire.
He shoveled coal to make a poor man's dollar.
Money music, Loretta Lynn, Coal Miner's Daughter. Coal Miner's Daughter is a 1971 song written and performed by Loretta Lynn. The album peaked at number 4 on the U.S. Billboard Hot Country LP chart and became Lynn's third gold album. Taken from her website. Before I was singing, I cleaned house. I took in laundry. I picked berries. I worked 7 days a week. I was a housewife and mother for 15 years before I was an entertainer. And it wasn't like being a housewife today. It was doing hand laundry on a board and cooking on an old coal stove. I grew a garden and canned what I grew. That's what's real. I know how to survive. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. And I really hope you enjoyed this video. I am only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.